Hi, Edwin. Thank you so much for joining me here today. Before we get started, I'd love to learn a bit more about yourself and how you started Brickin.
Absolutely. Thank you very much for having me here. So Brickin began in 2020 as an idea, and then it got materialized around the end of the year. And we always wanted to see how we could break down investments. And that was the whole idea why we entered tokenization. So it was kind of like a crowdfunding 3.0 with all the characteristics of blockchain, making it more feasible to make. So we embarked that journey at the end of 2020. And well, a couple of years here, we are still standing strong.
Do you want to go into a bit more detail about what Brickin actually does? Because I know you're very active in the tokenization space, but maybe just like an understanding of how it works.
What we do is we provide the functionality for anybody to tokenize their assets. So a company wants to tokenize either real estate, their debts, equity, whatever they want to do. We provide them a plug and play solution. So in less than 1 day, they can have everything they need: their digital asset, their distribution channel, their investors portal, people on board. So as of now, we're the fastest way to crowdfund everywhere. Tokenization, it's all about kind of like how you streamline your operations from the digitization phase. So you have an asset that digitize until you have the management of the investors or everybody who's backing you up on that asset.
But what, I guess, kind of assets have you been seeing tokenized both from Brickin, but also in the wider market in terms of trends?
On our end, we have seen absolutely now everything. We gone from restaurants, hotels, well, that's real estate, companies themselves doing Series A. We're going to go through a big one right now. Seed round, projects that have nothing to do with technology, or we do a B2C, a social app. So we're agnostic on the asset. We provide the same infrastructure for somebody who wants to tokenize real estate that for somebody who just wants to tokenize the equity of their company just to do it as a capital increase. So that's how we perform our technology.
With, I guess, that solution that you're providing, is it like a fully decentralized spectrum, or is it like centralized and decentralized elements within that tokenization structure you use?
On our end, as I am aware, we are one of the few companies who literally, you don't need Brickin. You can grab our technology and shoot it on yourself. It is your asset, it is your treasuries, it is your investors, it is absolutely everything. So we're on the very decentralized scope because that's for the good and the bad. The bad. Our know-how is embedded, but we don't do consultancy, which is something in centralized authorities they do, which sometimes is better or not. It depends on the output.
It's good to hear. I feel like there's been this rise of institutional DeFi recently, in terms of like everything being more permissioned. And I do think there isn't a case to be made in the sense that it's still decentralizing current infrastructure to a degree. But I think we're seeing a much more institutionalized crypto space. And I think tokenization is leading that change as well. I'm not sure if you've experienced that, particularly with funds being tokenized.
Yeah, no, there's some funds tokenized on our end. We're working on some. And some are worried about like using permissionless less, but then you have to explain them. Like it's not as they think, but it all sense to know how. Kind of like it goes again to saying, no, but in public blockchains, anybody can see my transactions. Yeah, it is true, but then you have CKs, and it's like you have to go to the zero knowledge and explain like, hey, you want to have something more protective, you can go into this chain. I think it's just a matter of time till they understand that the value is on the transaction. Because right now they're not pricing in what it means for them to run public. Like the information and the sharing between other funds can be very efficient for them. They can start having a lot of more information that they currently have. So I think it's just a matter of time before they jump in. And the structures are being made for them to stay compliant, which is the only thing they need. Am I going to stay compliant? You can be compliant in absolutely any kind of chain. How you do it, now there's more opportunities about it.
How do you think, I guess, tokenization platforms, or I guess platforms also targeting institutions, should be marketing themselves and essentially setting themselves up for success, because it's not the easiest thing to do in the world?
No, absolutely. There was a big pain also at the beginning with the marketing where everybody said like liquidity from day one. And that created a big problem for some clients who thought like, oh, if I deploy, first of all, everybody's going to buy, or how does it work, the instant liquidity? Because people are thinking in crypto, like, But they forget that in crypto, there's thousands of coins who are illiquid. And in stocks, there are thousands of stocks that are illiquid. So it's not like you just technology to increase the liquidity. It's just that you can really optimize how liquidity is made because the transactions are easier or something. But it's still up to the job, to the client, to put liquidity in. I mean, you need your investors. Market making right now in RWA or securities is not very optimized. We might get there, but it really doesn't matter. In the end, it's the client. In the same way, when you go to stock markets or to crypto markets, the client needs to put liquidity in. The client needs to work for new LPs to join in. So that is something that for very early stages projects, they just don't understand because you're putting a lot of different layers of complication into how tokenization works and the true liquidity works. And they're like, oh, but this is expensive. And he's like, yeah, putting liquidity is expensive, but I mean, you wanted liquidity, so you cannot say like money is gonna pop in from anywhere. So that's kind of like the problem right now. But on the other end of the spectrum, they're forgetting all the functionalities that tokenization break. Cross-border payments, like that's super simple. You don't need to go through banking for 4 days, high commissions. Trading between certain currencies in the formal way is super expensive. How fast you can allocate funds, how fast you can obtain funds from everybody. So there's a lot of great things happening. It's just that the utopia of instant liquidity, that was just made up by marketing. And right now we're suffering still from there. Well, that's my perspective, of course.
What do you think needs to happen for more liquidity to come into tokenized assets? Is it a case of education, or do you think that it won't always have that active of a secondary?
What it needs to happen, I guess, it's education, but obviously the incentives as to people create a business based on incentives, except the crazy minds who decided to do tokenization since a couple of years ago. So we're the ones trying to educate and push, but it's been a really hard. I mean, we've seen a lot of tokenization platforms fall over the couple of years. New ones are being born, but they are born on the fact that they should say like, oh, liquidity. And it's like, oh, no, you know what? You're going to fall into the same things that we already learned how to do. And it's fine. I mean, it's just a cycle. But I don't think the maturity is there for a great secondary market. We're seeing some like ridiculous trading in certain exchanges of securities, but I don't consider it a fail. Fail will be for that secondary exchange to not exist, right? That will be like the failure. We're getting there. Money is jumping in, a lot of more certainty. I mean, that's why we all have to push together in the sense that, yeah, we're competitors or whatnot. But in the end, every new innovation or deployment of product is going to bring more innovation and education into the space. Because I've seen it. 2020, tokenization was a weird word to say. I mean, we used to talk about security tokens. Now we do tokenization, but now we talk about real world assets, which is an awesome work. Whoever invented that, I'm super grateful because that was like it. And basically, that's how it's an ongoing ball, but it's not going to stop. Like it's stupid to think that new whole market is not going to stop, because that's a potential, like they say, trillion-euro market. And when you put like that amount of millions, then somebody is like, oh, we need to capture that. So that's happening as we speak.
In terms of the evolution of securities, why do you believe that tokenization is the next evolution of securities from where they began to where they're going now?
A lot of the intermediaries will be gone. I mean, not from a legal perspective, but how they work, it was all a big black box. So when you buy stocks in the US market, I don't know where you're located, but I'm in Spain. I use a broker. So I don't own the shares per se. I own a position in a ledger on a broker who is the one dealing with the stocks. And a lot of these things were quite weird because nobody has thought about it. Like, I own stocks, but you don't really own stocks. If you own stocks, you will be able to freely transfer them to another provider, and that don't work. Maybe sometimes the other provider will say like, no, I don't trade those stocks. And it's like, oh, where can I keep it? In your bank. And the bank will say like, I cannot custody stocks. And those questions is like some people don't ask. And then something comes with the Web3 and it's like, I want things in my wallet. And that it could bring a lot of efficiency. Because in all those tradings that you want to move around stocks, there are fees, obviously. There's fees at the movement, there's fees of custody. So it's all about efficiency. So the markets are going to evolutionize in the way that now it can be more direct. The less intermediaries, the more frictionless less. So I have zero doubts like all stocks will be running on blockchain. It's just because it just became more efficient. Not because I'm a blockchain lover. It's because we evolved from a technological point of view. We're using the same thing like in the freaking 60s, 70s, the 80s, and that's just very stupid. We have evolved in all other areas, but in securities, we have not.
Yeah, agreed. I think efficiency will be a massive factor in terms of securitization or transitioning securitization. In terms of like Brickin's business model, is it almost B2B with a B2C angle, or what is your business model at the moment?
Yeah, we're B2B. We deal directly with the company, and a B2C because we do have a community of investors that they can jump in, but we're not obliged. In the end, we're a software provider, but we do give them all the tools for the B to be able to raise and onboard their Cs. Traditionally, we will be considered a white label because in the end, we're just in the back, the infra, we provide everything. And in Web3, they just call us a DApp.
Okay. And how have you, I guess, just being the more technology, I guess, provider, how have you managed to onboard projects so far? Is it just through word of mouth, through marketing? How have you grown to where you are today?
We started 4 years grinding like crazy. So we picked up a lot of nice keywords on SEO. That brought us a lot of organic traffic because we've been talking about this for a long time. So our domain authority right now it's at 40, which is quite decent. And then basically media buying. Our CMO and co-founder, he comes from the media buying industry. So we're targeting absolutely every single day leads. So in that way, we're super traditional. I don't foresee myself how we structure the company as a Web3 company. Like, for example, you should go to Twitter States to find clients. No, you get investors there and maybe something else. But the business that we're targeting, it's still a B, and that it's in a different funnel. So you have to respect who you're trying to target and where. So we do have some LinkedIn campaigns, some webinars. We like to go on certain channels that for us have worked. But right now, our best acquisition channel by far is Google Ads.
I appreciate the honesty. And I think, so I work with a lot of early stage Web3 startups. And I think sometimes the basics are almost forgotten. Like, and I think like, for example, advertisement is, whether Web3 likes it or not, because it is, I guess, very centralized, it does still work. And what I always think about doing is like, you have to experiment different campaigns to run. So say you're just about to start your go-to-market plan or your distribution plan. You almost have to run different experiments using different channels, and then just from a data-driven approach, figure out what works for you. And I think a lot of startups actually discount advertisement. But on advertisement, I'm not sure what the regulations are like within Spain or where you're targeting people. But I know in the UK, recently they've just made it, essentially they've banned most crypto advertisements or anything related to investments. And they've put a pretty hefty price tag on like rating that. And I think the US has something similar. How do you think about advertising in terms of regions?
Right now, we're based just in Europe and LatAm, just because of the easiness of penetration. There's different regulations. The whole issuance of securities on chain is completely different. So that's what we're targeting. And we're not banned by Google in the sense that we don't offer investments. We are a platform that allows certain characteristics or has embedded certain things. So I don't trigger the Google that we're offering any kind of investment advice or even cryptocurrencies. Our landing pages from the Google, we don't talk about tokens. So we're always changing the wording just because now it's more lean, but Google before, every time you had like a token inside a landing page and they found out or trigger, you would be like, oh, you're offering crypto. And it's like, no, I'm not offering crypto. Can we stop with that, please?
And how come you're targeting the LatAm market?
A lot of people don't realize how important LatAm is. But on our sector of crypto, the adoption rate is booming. Like Brazil, we're running some campaigns there just because of how much adoption is happening. Argentina, as soon as it changed it only to the Bitcoin mania, we started targeting there and we started getting leads. So the better crypto does, the easier for us to generate leads, just because they start thinking positively about blockchain. And we cannot deny the fact that even though I don't issue cryptocurrencies, we are considered in the cryptocurrency vertical, right? So us right now we're targeting where there's a good feeling. Now Mexico, they have a huge exchange there that people don't know. I think CoinMarketCap is 40. Last year was 100. So that jumped a lot of trading volume in just 1 year. So that's things you need to consider to understand that, hey, something is happening. And Latin people are very much self-aware, kind of like they like to use their own tags, they like to do all of these things. And basically what we're trying to promote there is kind of like, hey, you can be your own asset owner, your own digitization phase, you can be all of that. And that's triggering. It's like, oh, I love this, like I want to have the tech, I want to do all of this. But it's just because they're becoming very well aware of the characteristics of blockchain and what it brings to them. And they've already passed the only Bitcoin is blockchain. They're now in the second phase. Because here in Europe, or United States or Asia, we're like way above that. But in LatAm, they took a little bit longer, and now they're in the, I want to test phase.
And so in terms of like within those regions, because you're obviously targeting the asset issuers or the asset owners, how have we found the adoption from the asset owner side, not necessarily the consumer side?
Yeah. Right now the asset owners, specifically like funds, are more into the testing phase. They're trying to see how this can benefit them. We have a venture fund being created through a tokenized way, just because for them they're in Web3, so the narrative for the LPs is different, but they can do all the transactions even same day. That's crazy. If you think about it, a lot of people think, oh yeah, bank transfer work, but it's not just that. There's a lot of things happening when you have to do that, the signing of documents, the onboarding, the contract, looking into the bank that the payment came through, the bank not doing any due diligence because you just received money from a weird country, even though it's legal. So there's a lot of things that on the day-to-day, a lot of people don't know just because they're not engaged. But certainly with this like tokenization and asset management platform, you can do everything same day. And when you tell them that, it's kind of like they're mind blown, because for them it's kind of like you reduce all my day to day or whatever. So asset managers are very much interested, and that's why we're seeing a lot of deployment or test case from big ones. The biggest asset manager in the world, BlackRock. Those guys know it. If the biggest asset manager is telling the world that the world is going to get tokenized, that means they own the world, so they will tokenize it, no doubts. But it's because they're like, how much money are we saving with this new technology? And when they agree with that, they're like, we need to change our legacy system. This is the new system.
Do you think decentralization will continue moving forward? This kind of leans into the permission DeFi side of things. Do you think that moving forward with all these massive institutions coming in, that will still keep that same element of decentralization?
I think, as you would say, it's going to be a mix with TradFi and DeFi. The problem is that for these big institutions, and that's why they're accelerating some things, is DeFi. It's a big problem because now everybody can be their own banks, right? And before, if you wanted to keep money, you have to go to a deposit account. If you want to generate a yield, you have to go into their long 10-year lockup period or whatever money. and then you just get peanuts on top of that. And then it comes DeFi, and it's like, you know what? I'm gonna have my own money. I'm gonna manage my own money. I'm not gonna get my own yielding. How is that? And they're like, no, that's illegal. Oh. And it's like, it's not. So I think the world moving forward is definitely going to be still TradFi. I mean, a lot of people would like to give the money to these institutions. A lot of new institutions will be born, not just the ones with banking, because when you do crypto, you need to have a custodian license, depends where you are, maybe some other type of license, but not the banking, because those are made for legal tender money. So now it's going to be weird. And then there are always going to be like these opportunities for everybody to be on their own. So I think it's going to be, at least for the future, when all capitalist matters are owned, because if we think about it, everything capital owns also. I mean, our money is owned by the bank. Our housing, maybe you have the mortgage, but who owns the mortgage? The bank. So do you really own fully your house? No, because if you go on default, they take our house. So you don't really own it. So it's all of these things that we think we own, but we don't really own it. That now with decentralization and the fact that we get to own, we can at least pretend to fight the system. But it's not a fight, it's just that we at least get to own for once again our assets. So I think it's going to be a nice mix where maybe you want to have a little bit of everything. Yeah, I'll trust the TradFi for my company funds because I still believe in that. But then on my day-to-day, I also keep my assets on my wallet, and maybe I'll do all of these things. It's happening with Bitcoin, right? A lot of people saying like, why do you need an ETF in Bitcoin? Well, you have the people owning directly their Bitcoin in the ledger, which is fine. This is the normal, usual way. And then you have the institutional jumping in the ETF Bitcoin because they trust the centralized authority just because they're on their asset manager or on a portfolio or on all the things. It's a mix. And I love that new example, which is both work at the same way. Like it provides exposure, but whoever wants to own it on their own, they can. And whoever wants to own it through an intermediary, they can. But access just became relevant to both parties. And we're going to see that the construction of very banking, lendings, loanings going to the decentralized way. And we'll see the decentralized way going to the centralized way. So it's going to be a pretty cool mix, I think. Going to be healthy, at least.
The financial sector or the banking sector almost hasn't, I guess like fintech was an innovation of it, but like it hasn't been challenged in terms of like the core model in a while. And I think with the like open nature of blockchain and the open innovation aspect of it, banks are definitely feeling it a little bit. I mean, like to give you an example on that asset ownership piece, so my family are based in Greece, and obviously they have a lot of liquidity issues in Greece. And so in the past, like they put money in the bank, and then suddenly that bank will have like financial issues, and then it's just all your money gone pretty much. And then there's only a minimum you can take out every day, and then like you're never really going to see that again. And that actually happened like fairly recently. And I think a lot of people in, I guess, more developed countries, you don't really hear about it or learn about it. But I guess going back to the emerging economies, there is a massive need and requirement for that. With, I guess, the adoption of all this decentralized technology, particularly within tokenization, what key areas do you think will see an increase in demand and in terms of products as well? So you mentioned custody solutions as one, but what other areas do you think will have a massive demand now that we are seeing these institutions coming in, as well as more consumers as well?
So I think the evolution of product-wise, for example, from a tokenization standpoint, it started at the mere issuance. I issue an ERC20, kind of like that was the product. And then you go into, I should have them distribute or sell it. So we started doing all these investor portals and whatnot. And then it's like, oh, but they have investors, they have a cap table, treasury, they have reportings. So we go into asset manager. Oh, now we go into where the money goes or who keeps it, the custodians. And then it's like, but the money should not be idle. It should be moving, DeFi. So it's kind of like the whole ecosystem of blockchain, which was very fragmented. Now we're using the different solutions for a whole flow, which should be an end-to-end. You need an issuer, a distributor, an asset manager, custodians probably, but you can engage into like DeFi, so you can start yielding on your treasuries, and then go back to distributing, and then go back to all of this. So it's kind of like the ecosystem itself It's actually moving around and connecting all these building blocks that were, like, for example, I had a conversation with an off-ramp program, and they were doing just for commerce. And I was like, hey, you need this. And they was like, oh, wait a second, you just develop a new use case for me. And I was like, yeah, you were just focusing on the B2C angle, but I have a problem with the B2B, and your off-ramp, it's amazing. So can I plug into my blade? And he's like, yeah, so that guy just have now a B2B angle. But it was just because sometimes when you build something, and in crypto happens a lot, it's just like, oh, you just want to do it for here. But it's like, dude, if we think about the massive of how easy it is to connect the building blocks here, which is super simple, not one integration phase, but then I don't even need to integrate with them. I can just send the client directly there. It's simple. In the Web 2, it's even more fragmented. Here, at least, with everybody owning in their wallet everything, makes it so much simpler to connect certain dots. And that's where we are. Like, product-wise, I think right now, it's for me, what we need is better off-ramp, on-ramp, better abstraction layer. And if we're able to do those two things, then yeah, blockchain runs everything. That's kind of like the main pains right now.
The end goal is for everything to run on blockchain.
Yeah, I mean, I hope so.
We'll get there. So taking it back to Brickin, what are your priorities over the next, let's say, 12 months?
I'm going to put it in this way. At the end of the year, the success of this company at the tech level is going to be managed if we end up doing what we already have in mind and in paper. Blockchain is nowhere to be found. Whoever wants to pay on blockchain, they can connect with the wallet. Whoever's not, we give them the abstraction layer with the wallet that we created with certain goods, log in with their Gmail, payment done with their Visa. They get the tokens. They don't even know it's tokens. They just have a wallet in their email or wherever we stand up establishing. And then all of that abstraction layer is what we believe is going to be the success, because right now it's our biggest point. So from a tech perspective, that's the goal. In the end, what the client wants is they don't want the MetaMask wallet. They don't want to pay fees on gas, because for them, it's already painful, USDT, USDC, and then tell them, oh, you need to buy Ethereum or BNB or AVAX or whatever chain you are, is to pay the transaction. It's two payments. And for them, it's too costly because they have to onboard twice to buy two different tokens. It might seem simple, but for someone with zero knowledge in blockchain, that's too painful. So that's kind of like where we are. And then from a business perspective, opening up Asia, we just got some backing up in the area from certain VCs in Asia. So we're about to begin a roadshow over there starting in April, and then see what it goes there, because I believe the next financial dragon is definitely going to be Asia. Like, I have no doubts, just because of how much evolution they're doing in fintech, adoption at the regulatory level, and let's not forget how many millions, billions of people are in Asia.
Are there any specific regions in Asia that you're looking at?
Yeah, so I'm quite positive, obviously, on the financial level that China, but let's figure that out. I want to go more for the niche yet. For example, I know South Korea is going to be big, just they're opening some things. Japan is going to allow companies to own digital assets now, which is quite interesting. And basically, I want to target just the testing phase, just minor countries. I'm not going to go for India. It's too massive. Regulatory wise, every section, I don't know how they call them, district now, kind of like every state has its own regulation, which is a huge hurdle. So best small channels with certain good notices, because that's what you penetrate, hopefully. And then we scale operations from something that we can consider our hub of operations in Asia.
I think this has been a very refreshing conversation in how you actually think about growing and scaling your business, because like I said, I speak to a lot of different Web3 teams, and I also work in a lot of different Web3 teams. And I think sometimes the business fundamentals are forgotten, in the sense of you just slap Web3 or crypto onto something and that's going to raise your funding, and then you don't need to think about revenue or building your business. But I actually I appreciate that you're putting such an emphasis on actually building a business versus just building I don't know, a crypto token or whatever that has no revenue model. So I think that's very refreshing to you. And I think a lot more companies need to take that approach.
Thank you, Maddie. You should speak to all the people I spoke in 2021. They call me too corporate. And I was like, that's me, man. Like,
I
not
love
my
that.
problem. I just want to have a business.
And now you're
Yeah.
bringing the corporates into blockchain.
Yeah. But I'm not the only one. Lately, many of the people I have encountered, I went to, I don't remember what was the summit anymore. At London. Yeah, it was a Web3 summit. I saw a lot of guys in suits. I'm a lawyer, by the way. So I was like, oh, it's time to bring out the suit, because I went from suit to t-shirt, and then because I had to blend in, and then I'm back at the suit, and I was like, guys, corporates are coming. You better be changing a little bit of what we think, because those guys are the ones with the big deep pockets. Blockchain has a lot of deep pockets.
Yeah.
But as I'm aware, we're only like, what, 5% still in blockchain, in that 95 rest still out there.
Yeah. I think there's a case to be made for, I guess, still maintaining like the blockchain culture, like the crypto culture, because I do love the whole like cryptos with space and everything. But also like this emerging space of more the corporate side. And I think companies almost have to be comfortable in, I guess, operating within both of those.
Yeah, I completely agree.
Awesome. Well, thank you so much for this conversation, Edwin. It's been incredible. And I guess, what is the best way for people to support you and Brickin?
Yes, of course. Thank you very much for that. Yeah, just go to our website, Brickin, Brickken, and you can find us on LinkedIn, on Twitter. I mean, if you're interested in tokenization and want to do it swift and neatly, then we're definitely the go-to company. And thank you very much for that, Maddie. It's been an amazing interview. I was going to say morning, because it is my morning, but I don't know when you're going to post it.
It's evening here in Australia.
Okay. Perfect. So yeah, it's been an absolute pleasure.
Yeah.
Thank you very much for that.
Of course. Thank you.